All right, so if you're like me, insurance is one of those things that you never really like to think about, and for a good reason, right?
So you and your friends don't just like sit around the table talking about
Shockingly,
insurance?
no, it's
Me neither.
not.
I'm just being honest. Yeah.
Yeah, so I'm not even an insurance like guru or anything like that. That we actually had to do quite a bit of research on this part to just have the information that we want to share with you guys. But it's insurance is a risk management tool, meaning that it's a plan B. It's never your plan A, right? Like It's not like people get insurance because they want to have an accident and then have to use it, right? Like that's not.
Yeah,
that's not
there
the
was
purpose.
someone who said something that the crazy thing about insurance is it's the one thing you buy hoping you never have to use it, no matter what kind of insurance it is.
Right, unless you're trying to commit insurance fraud, which we don't.
We don't recommend.
Encourage at all. No. So yeah, if you're thinking about insurance, it's because typically something went wrong, right? So again, it's not something that we like to talk about, that we enjoy, but in an attempt to change the negative sentiment, we will discuss one of the most important types of insurance, one that hopefully we all have, right? And that we do have to use, from time to time, at least once a year for preventative measures, right? And that's
hopefully
health insurance. Yes.
Yes.
So it's important because it is a vital tool that impacts our quality of life quite a bit, right? So
and your finances too. Having
Yes.
the correct coverages, understanding your coverages can help you make better health decisions. And just like anything else, we try to decode things. So we are going to talk about some terminology and what different words mean that you're going to see on your insurance documents so that you can understand what those mean for you.
Yeah.
And that first one is deductible. It's basically the amount you have to pay before the insurance company ponies up on most things. But what do those even look like, Mark? What is a normal deductible?
Yeah, so a deductible could be anywhere between $0 to $8,000, and it's essentially kind of like you said, the money that has to come out of your pocket before the insurance company starts paying for your health expenses.
And does that apply to all services, or is that particular types of services?
Yeah, so generally that applies to all services, right? So possibly with the exception, some insurance policies don't require that for preventative measures, right? So if you're going in for your annual checkup, right, or
you've just caught the flu or something like that, you likely have a different type of payment.
Yeah, that could be the case. So again, generally for those preventative measures, that's not something that you will typically get charged your deductible for. But basically everything else, right? So yeah, like if you get a cold or you have to go to the doctor's office because you hurt your ankle doing some sort of activity, so each one of those things goes towards that deductible. So that once you meet it, let's say it's $1,000 for the year. Once you have had enough expenses to cover that $1,000, then after that, the insurance company starts paying in.
And that's for the next term, coinsurance. But before we get into coinsurance, one thing that shocked me about deductibles when I became an adult is my prescription plan has a deductible. I'd never heard of that before. And that was something like just in the last 5 years. So there's a certain amount I have to pay every year out of pocket for prescriptions before I get into using my prescription plan.
Wow. Yeah.
So it's not necessarily just your health insurance that has those deductibles.
Yeah. And the thing is that there's different insurance. We think about health as just everything in general that pertains to somebody's, just biological health. But there's health insurance doesn't necessarily cover, eye problems or, like if you need glasses or things like that, right? That's a completely different insurance. Yes. Dental insurance is also completely different insurance, right? So it's not just, just health in general, right? It's, again, specific services. And the thing about deductibles is that they start over every single year. Right?
Oh, right.
Yeah. So that's a huge part to know as well, is that it's not just, okay, I have to pay $1,000 for the lifetime, of this policy. It's every single year at the beginning of the year, that deductible restarts. So if you didn't have, the medical expenses to cover that $1,000 for, a given year. Then the next year you start all over again, which
So that's a kind of a reminder to make sure you have enough in your emergency savings to cover your out-of-pockets, those expenses. So you've paid your deductible. You're now in the co-insurance world. And so co-insurance, you're cooperating with your insurance to cover things.
Yeah.
What does that usually look like?
Yeah, so co-insurance will typically be between 50 to 100%. So if it's 100%, that means that you don't have to pay any more, out-of-pocket expenses at that point, because the insurance company is covering, all of that, all the expenses from that point on. If it's 50, then that means that they're going to split it 50-50 with you.
I think the most common one I've seen over my years is 80-20. So even after I've met the deductible, I'm still responsible for 20% of any sort of procedures that are done throughout the year. And then they pick up the other 80. So that's been most common for me. What is a copay?
Yeah, so a copay is a preset amounts that you will pay for certain benefits, like medication, like doctor's visits, like visits to the emergency room. So, those are kind of the most common, most used kind of services. So the insurance company has kind of established already certain deals, negotiated contracts to say, okay, for these services, you're gonna pay this much, and then they pay the rest.
Got it. And then another thing that people don't realize is, yes, you have your deductibles. Yes, you have your co-insurance, your copay, but there's actually typically what's called an out-of-pocket max assigned to your policy as well. Yeah. But what does that mean?
Yeah, so this is literally the maximum amount that your plan would require you to pay in any given year.
So this resets every year also?
Exactly.
Okay.
Yeah. So also good to know, because this is that annual out-of-pocket maximum is really what you would want to have as your emergency fund for, health insurance, for health in general.
And in our policy, there's an individual one, and then there's a separate family one. So we each have deductibles, but there is an out-of-pocket max for our family as well. And one thing that we've always done is, like, if we've had a procedure early in the year and there's something I've been putting off, I'll go ahead and try to get it scheduled before the end of the year too, so that maybe we can avoid that new deductible the following year. Yeah,
that's kind of a pro tip, right? If you are in a year where you seem to have a lot of medical expenses, you might as well
get it all done,
put it all together, because that means that your deductible will be met faster, and then you'll get to that out-of-pocket maximum probably a lot quicker. So then the insurance pays a lot more for all of those services combined than if you did it all in separate years.
Yes. And then there are, in most cases, those, you talked about this earlier, preventative benefits. So like annual checkups, if you're a female going to see your female doctor, those are usually considered preventative visits and are even more cost effective with most plans.
Yeah. And these are great services to make sure to take advantage of, because some of them are like screening type of services, right? So screening for high blood pressure, for high cholesterol, things like that, for cancer, right? And so these are very, very beneficial things that you want to get in front of. So a lot of folks really dread going to the doctor, really don't want to do it, but ultimately, these services can make sure that you keep a very good lifestyle or quality of life for a long time. In regards, going back just real quick to the out-of-pocket maximum, this isn't something that most people end up having to do, because it typically takes something pretty catastrophic.
Pretty high number. Yeah.
Right. So it has to be kind of a very catastrophic type of event, or if you end up having some sort of health condition that requires constant medical attention, and or just expensive treatment in general. So again, it is just very important to know this number to make sure that you know what you could be in for, because we do unfortunately know that there's a lot of people in this country that have had to file bankruptcy or have had just very, very intense financial issues because of health problems.
We know Janet, one of the two owners here at Gen Wealth, her husband had been in a car wreck and had major medical expenses afterwards. And they didn't, I don't believe, file for bankruptcy, but she actually had to make a career change because the career she was in was not enough to cover the expenses needed to pay off the debt in a timely manner or to even keep them afloat.
Right.
And so that actually drove her to a career change, which, don't get me wrong, I'm thankful for the career change because it's why we're here.
Let us hear.
Yes. But I think that, sometimes these not being prepared for these things or not being aware of them can set you up for really drastic changes in your family. Sometimes those will be good, like it was with Janet, but it's really good to understand it on the front end so that you're not in that position if at all possible.
Yeah. So let's make sure that you've got the right kind of insurance, right? So first of all, where do you obtain health insurance?
Their most common place that I think people think of it is through their employer. Often when you enroll in a new job, you've got a certain waiting period and then you're eligible for the plan. You also might have what's called a qualifying event. So if you've been through divorce or you've lost coverage, you've gotten married, you've had a baby, those are all qualifying events for adjustments to your health insurance as well. It's important to understand that. If you miss open enrollment, though, with your employer and you don't have a qualifying event, you're stuck till the next year. Wow. So don't ignore open enrollment with your employer.
Yeah, and is that typically at a certain time of the year, or when does that happen?
Usually it's going to be in October or November because those activate typically by the next January. So your employer is going to want to have your selections in place so that you're ready to start the new year in January. So even though you do open enrollment, the coverage won't start right away.
Yeah, I guess that's why we just had ours here.
Yes, and actually our group's doing them next week. So another option if you're younger is you can actually stay on your parents' plan much longer than you may realize. You can stay on until you're 26 as long as you meet certain requirements. Okay. When I was younger at 18, you were done.
Yeah.
And I had coverage through college for a few years, but I went without coverage and didn't realize it because I didn't know I wasn't on my parents' plan. So God thankfully protected me. Wow. But because of that kind of gap where, yes, you're technically an adult, but you don't really have any income, they changed that age to 26 several years ago.
And one story, which is my story that has to do with that, is that right whenever they were changing this law is actually whenever I graduated from college. So I had just graduated from college, which at the time was basically when you could stay on your parents' insurance.
Till you got off college.
Right. And till you finish college. And then 2 weeks after I graduated, I had a pretty severe accident where I was electrocuted and I ended up
Wait a minute. I've not heard this story. We're gonna talk offline after this one. I did not know this.
So I ended up having to have about close to $90,000 worth of medical expenses in surgeries, treatment, all kinds of stuff. And it was basically all without insurance at that point because I had just graduated college. And it was right during that time that they changed the law to where you could stay on your parents' insurance until 26. If it wasn't for that, I probably would have had to file for bankruptcy or something at that point. So,
that's insane.
Yeah, a huge benefit if you are, again, just graduated from college and your parents have insurance. Make sure to have that covered, have that conversation so that you are covered under their plan if you don't have a job that allows you to be covered under their plan yet.
And then if you don't have it through work, or you can't be on your parents' policy, there is the marketplace. And I've used the marketplace before, but I would also say, you mentioned your insurance brokers. I think that may be the way I would recommend people go because it was so overwhelming getting on a website and trying to do this. And one thing that shocked me was I put in all of our information and it gave me a quote. And I was like, oh, that's not bad. That's not horrible. And then it asked me about medications and it pulled our medical history. And then it was like 3 times that number.
Oh my gosh.
And I was just like, okay, I don't need this kind of care. And I don't need that kind of, I had to start choosing between our budget and that. So I love that there are also insurance brokers out there that can help you with this process.
Yes. And because ultimately, when we think about, the cost of healthcare, what we can probably all agree on is that it's just too much. Right? It is so expensive. So if you don't have a job that allows you or that subsidizes that cost for you, or if you, like Teresa said, if you can't be on your parents' plan, it's going to be pretty pricey, right? But there are a few things, that can be to your advantage. So obviously the most affordable one is through the employer, but if you're healthier, that means that you're going to have a cheaper rate because they're going to look at your history, right? They're going to look at what medications you have, things like that. So if you're young, if you're healthy, then you're you should have a pretty affordable rate in the marketplace.
And you think about the cost of not having that insurance. Think about Mark's situation, $90,000 worth of expenses out of pocket. That could absolutely derail your future finances. So I understand that it's expensive. I understand there are a lot of people that just feel like it's not worth it. But if you do not have it, then it may not be worth it. And then you also, the statistics tell us people who don't have health insurance will avoid care. We talked earlier about preventative care. Catching those things early is critical for a lot of the things that can be avoided. And if you don't have insurance, statistics tell us you're probably not likely to go get preventative care.
Right.
And so then we're talking about quality of life. I mean, yeah, you might have more money, but what if you don't have as many years to enjoy it?
Exactly. And that's something that we actually see here quite often. So don't have a whole lot of time left. So there's a few things that I wanted to make sure to cover here. So, and that's that insurance actually doesn't cover everything, right?
No, there are a lot of elective procedures out there.
Right. So things like plastic surgery, things, and anything that's just aesthetic, right? Obviously that I don't think that's going to be covered. There are certain pre-authorization procedure or protocols that you'll have to go through in case of major procedures if that's needed, right? So we already talked about having to schedule non-emergency procedures for a specific year to cover that as quick as possible. And then if the marketplace and all those options seem to just out of your range, there are other options like MetaShare programs that can be more affordable, especially for families. So we would encourage you to also explore those options. So I think it's time for our 2 cents.
The cost of healthcare can sometimes make you wonder about whether it makes sense to go to the doctor. But understanding how health insurance works is a great step towards making healthcare less intimidating and making sure you get the care that you need.
Yeah. And whether you're completely new to health insurance or whether you're pro because you have so many family members that have gone to the doctor or needed care, right? And you've had to deal with it quite a bit. The truth is that health insurance and your health overall is worth investing in. So please make sure that you're investing into that. And by learning more about health insurance and also just becoming familiarized with what you have, the benefits that you have, and taking advantage of those. That's it for us today on Talking Sense. Join us next time to learn what you don't know about money.
Thanks for listening to the Talking Sense podcast. And if you like what you hear, make sure to subscribe to the podcast to get all the newest episodes.
The GenWealth team is available to you 24/7 at info@getreadyforthefuture.com or call our offices at 866-653-PLAN. That's 866-653-7526.
And while we like to have fun here, we're also financial advisors, and that means disclosures. You should personally consult a financial advisor before making any investment, and no strategy can assure success.
GenWealth Financial Advisors is an Arkansas registered investment advisor with securities offered through LPL Financial, member FINRA SIPC.